Welcome back, friends. In the last two lectures, we covered the solid base of admission of partners. So, right from the profit sharing ratio and all the goodwill entries that you need to know. So, now you have a solid base. There's nothing more you need to know as far as the basics is concerned. We'll directly jump on to the questions. So, before I start, I would like to give you one guarantee that you're learning partnership in a very new way. That is, you are able to relate one chapter with another one. So, because of this approach, you'll never forget anything in the exam, and the concepts will be thorough. And other than that, any question that the exam can think of is already covered here. In case there are something is out of portions or slightly tricky, it'll be very easy for you. As I've gone into the depth of the concept, you will not realize now. But when you compare with other people who have read it in school or another coaching institute, you'll know the difference. Now, this is the question number one when it comes to admission of partners. So this is going to be a condensed form of everything that we have learned till now when it comes to admission. So the question is, take it down. I think you have a copy of the PDF. Yeah. So question number one: ABC are partners sharing profit in ratio 3:2:1 on 1st April 2023. D was admitted for 1/7 share. He brings in 5 lakh as his capital and 35,000 as a share of goodwill. So these are all basics. We already discussed this. So now we have 6 cases. So the main reason for this question is in this type of questions, usually the different cases will not come in a single page or single under a single question. So because of that, I brought all the cases that can come in respect to such questions into this one part. So whenever you have to revise, you just read through what you have done here, and you'll be thorough for your exam. Now, let's go case by case. The first case is he paid premium for goodwill privately to the partners. So you already discussed premium of goodwill. So the first part, whenever you have questions related to any partnership chapter, irrespective of change in profit sharing ratio, admission, retirement, or death, it doesn't matter. I want you to condense the question into notes, like working notes, kind of. For example, I want you to do this. So A, B, C are partners in the ratio 3:2:1. One thing I'll just yeah. Then on this date, that is on 1st April 2023, D got admitted. So after D got admitted, the new ratio we need to calculate. And here on this date of admission, we can write capital bought in by D is 5 lakh and premium for goodwill. What is premium for goodwill? That's his capital contribution that he brings into the business because he's admitted newly. Is 35,000. All right. Now, the reason for doing this is you don't have to, while you're solving the question, you will have to look at the question again. But when you're looking at the question, you have to search for things. But now, after this is done, you just have to look at this diagram. It'll be simple. You'll think it's a very small thing. But when it comes to concept and clarity and time saving, this is the best way to be followed. This is going to take you 1 minute, but it'll save you 3 minutes. So net gain is 2 minutes for you. Now, one thing before we proceed, I'm going to give you a short version of doing calculating new share of profit. Because see, most of the time, whenever you need to calculate, you need to do that old ratio, new ratio, everything that we did in last class. But however, some questions will be very straightforward. So in that case, I think we already spoken about it before. But in that case, you have to follow this method, follow this thought process. See, here they're telling 1/7 is the share of profit for the new partner. So 1/7 is the share of profit for new partners. Just think about it, no? See, here previously shared profit and loss was 3:2:1. So when you add all, it's 6. So now they're telling 1/7. So what does it mean? It means 3:2, 2:1, 1. Why? Because when you add everything, now it's 7 and D share is actually 1 by 7. You're getting the concept. But this thing will be used only when it's 1 by 7th or only in these cases. Why? Because normally if they say it's admitted for 1 by 4th of share, in that case you can't do it because here it's 1, 3, 3 plus 2 plus 1 is 6. And 1 by 4 is not, you can't do it directly. So you need to do the proper thing of old ratio, new ratio and find out sacrificing ratio. But here, simply they're taking 1 by 7th. So this, when you add all this, it's already 6. And since it's 1 by 7th, you have to just add one more. And when you add one more, it becomes 7. So 1 by 7th. This is the thought process you need to keep in mind. Only in such cases. Or else, if such cases not given, do it directly. But this can save you some time, especially in these cases. Now, one more thing. When the new ratio is calculated and there's nothing else given, like usually they give, right? They give you, for example, D was admitted for 1 by 7th ratio. And they also say that A, B, and C sacrifice their share and the ratio of 1:2:3. In that case, you need to do workings again. But whenever they are not telling in which ratio they have sacrificed or the sacrificing ratio, that means the sacrificing ratio is also 3:2:1 only. Correct? We have done so many questions related to this. I hope you're clear with it. Because if you're not, go back, do the questions, because then we have to proceed to little more tougher questions. Not it's easy for you, but if you don't have proper command over this base, it'll become a little complicated. Now, sacrifice range because only A, B, and C are sacrificing. In short, for this one share to be given to D, A, B, and C sacrifice that one in the same ratio of their old profit sharing ratio. That's what it means. See, one is added here. These three need to sacrifice. They're not telling in which ratio they should sacrifice. So we are assuming in the old ratio of 3:2:1. So sacrificing ratio also is 3:2:1. But this direct calculation of new profit share and sacrificing ratio can only be done in such specific cases where such criteria is satisfied. If not, then do the normal method. We have done it hundreds of times. We write partners, then we write old ratio, then we write new ratio, then we have sacrificing ratio, then we do all the different small types of calculations, and we find the old ratio, new ratio, and sacrificing ratio. That will take 3 minutes additionally. But in some questions, the majority of the part and the majority of marks allocated for such sums will not be the calculating new share of profit. It will be for the other things. So in such cases, usually they give such sums and they give such conditions. So that's when you need to be quick in your feet and use this method. Now, see, the reason I'm taking this much time is when you are thorough with this, I'm actually going to finish the entire partnership chapter in 10 more lectures. Not this admission, the entire part. And once you completed that, any question in partnership, you will get full marks. So we need to focus on the other chapters then. So, but in order for such level of command, you need to understand each and everything. Because while doing revision, there should not be any little bit of confusion also that can slow down your revision process. Now, let's start with the next part. Here I'm telling premium for goodwill is 35,000. So what does it mean? See, we know a goodwill entry should be made. But here they're telling 35,000 for his share of goodwill. So if he bought 35,000 from his house, that means in order to contribute for the loss in premium, he bought 35,000. But this does not say that 35,000 is the entire goodwill of the firm at that particular time. 35,000 is just his share of goodwill. But usually, how do we calculate his share of goodwill? We write the goodwill, self-generated goodwill calculated at the time of D's admission, and we multiply it into his share, that is 1 by 7th. Correct? But here they're directly telling his share. So in that case, how do you find total goodwill? Simple. 35,000 into 7. That is total goodwill, right? So 2,45,000. Did you get me? Usually they tell you the goodwill of the firm as on that date, and then we need to calculate premium of goodwill or his share of goodwill that he needs to bring from his house. For that, we multiply to 2,45,000 into 1 by 7. That is his new share in profit. But now they're already telling you 35,000 is his share. See here, they're telling 35,000 is his share of goodwill that he bought from his house. So for that, you just need to do reverse calculation and find the total goodwill. In this case, it's 2,45,000. Now, this part is over, right? This is the majority that we learned till now. The next part is we learn how to solve the cases. Now, before jumping to case 1, we know that all these 6 cases relate to entries of goodwill. But before we pass goodwill entry, we need to do one small entry. That is the entry of D bringing in his share of profit, his share of capital, that is 5 lakhs, and his share of goodwill. See, all these 6 cases related to adjustment we need to do related to goodwill. But however, we need to pass entry of him bringing in his capital share and him bringing his goodwill share also, right? That's what we're going to do now. First case. Before one case, we're going to write the common entry first. What is the common entry? Simple. Bank account debited to D capital account 5 lakhs. Actually, we're going into so much in depth in such a way that when the examiner actually asks you a question, it's going to be very funny for you. Like it's going to be a joke. So this is the common entry. We are bringing this is normal entry for passing that we pass for bringing in capital. Now let's start case by case. The first case is he paid premium of goodwill privately to the partners. Now listen, this is the reason why I brought all the cases that can be asked in the exam in relation to goodwill in one question. Now, nothing except this 6 cases can come. Only certain, the numbers may vary or the percentage or the values may vary. Other than that, the question will be exactly the same. Now, here they're telling he paid premium for goodwill privately to the partners. Whenever such cases are mentioned in the question, that's only a simple solution. You write case 1, no entry. What does it mean? Even though they're telling you the share of his share of goodwill, still you don't pass any entry. Why? Because in this case, they're telling the premium of goodwill was paid privately by D to the partners. So in this case, then they didn't even bring it into the business. Privately in his home itself, he paid it to them. So now they're satisfied. All the partners are satisfied now. Since the private entry has already been done. Since it's a private entry, it will not be shown in the books. So the entry of bringing in premium for goodwill and in relation to adjustment of the premium in for other partners, we do know old partner, old ratio, new partner, new ratio, and all the addition, subtraction, we pass entries for that. That is not done at all in this first case because it's privately settled. This is one type of questions which will come for 1 mark in your exam, but still you need to keep this in mind. You need to remember this first part. Now that case is over. Now second case in relation to goodwill is he brings his share of goodwill in cash along with his capital and 60% share in goodwill were withdrawn by partners. This is a normal case that we have been doing for a long time. So let's come to case 2. See, the first part, the common part, bringing in capital is already done. This is related to the bringing in goodwill and the adjustment entry. So the entry for bringing in goodwill is simple. Bank account debited to premium for goodwill account 35,000 and 35,000. Actually, we learned that these two entries, the first and second entries, can be passed together. That we can write the total bank account debited is 5,35,000, then 2D's capital account 5 lakh, and 2 premium for goodwill account 35,000. That can also be done. But since it's 6 cases, I'm passing this entry separately because I want you to understand the cases fully. Now, this is done. Now, the next part is he bought in his share of goodwill. Now, just because he bought in his share of goodwill, now we need to do pass the adjustment entry we have learned in the previous class. Important thing. I want you to follow the lectures in a systematic way. Only if you complete first class, you can go to the next one. Because then that's when you have full clarity. Even if you miss the classes, it's going to be trouble for you. But if you do it together, no question can trouble you because all the questions I have devised from the accounting standards themselves. So there's nothing new the exam can ask you. And also I made it relevant for your level of exam. So everything the examiner can even think of or talk about is already covered here. It includes past year question paper, all your book answers, book questions, everything is covered here. So don't worry. Now, premium for goodwill. We know whenever it comes to admission, this adjustment entry will be done in relation with the new term called premium for goodwill because he needs to bring in goodwill. Or else we'll just debit and credit capital account of partners in case of retirement or change in profit sharing ratio of existing partners. We've already done it in the previous class. Anyway, we'll do a lot more questions, but right now my primary focus is admission of partners. Now, then 2 A's capital. 2 B's capital account. 2 C's capital account. See, basically, this premium goodwill is actually D's capital account. But since D's capital account was not there before his admission, we bring a new term called premium goodwill because this 35,000 is in relation to only goodwill. That's why. In the last class, I've already told you that another way of doing it is instead of premium goodwill itself, you write 2D's capital itself. You add this 35,000 as D's capital and debit D's capital and make pass the journal adjustment entry. That instead of premium for goodwill, D's capital is debited. That can also be done. But however, for your exam or for any level, this is usually preferred because it shows that you have little more clarity than before. But don't worry. If you want, you can remember it as D's capital account itself. But whenever you're writing a board exam, the preferred method is this. Because I don't want them to get either half mark or 1 mark for such things because they may not be such well versed. The teachers may not be well versed in this because they're going to follow a small answer sheet and they have an answer key given. They're going to follow only that. So even though the technically, conceptually it's correct, you just follow this. Once you go to CA foundation or CMA or CS or any other professional course, you can do what you want. Now, this is done. Now, what we need to do is we need to find the adjustment entry to be done. So we need to find the amounts to be adjusted in relation to A's capital, B's capital, and C's capital. For that, what do? We do the tabular entry. So we make such that old partner old ratio, new partner new ratio that we learned. It's our own method of doing it. But however, I want to give you another tip in relation to such things. In the question, if you somehow find out the sacrificing ratio of partners, in that case, you distribute the share of profit, a share of goodwill in their sacrificing ratio itself. What is the sacrificing ratio? 3:2:1. So 3/6. 35,000 into 2/6 and 35,000 into 1/6. I'll tell you why. I'm going to do the tabular entry also and show you the difference. Don't worry. But so the amount is 1 lakh, sorry, 11,500 11,667. 5,833. 17,500. Sorry. Now, this part is done. Now I'm going to do the tabular entry and show you whether there's any difference. Now, before you get a little confused or you have some little of doubt you have, so I'm going to show you why what I'm doing is correct. So we know what we have done in the previous class. I have tabular entry here. Same thing for the adjustment entry of goodwill. We do partners. When we do all the partners, we write it down. We write A, B, C, and D. And you write old partners, old ratio. Credit here. And new partners, new ratio. We write debit here. So this 35,000 amount. Sorry, not 35,000. The total goodwill is 2,45,000. That amount in the old ratio. What is the old ratio? 3:2:1. The new ratio is 3:2:1:1. Correct? Yeah, so 2,45,000 was the goodwill earned by the old partners in the old ratio as on the date of D's admission. So in which ratio the old partners would have earned? 2,45,000 only 1,22,500. 81,667 because 3:2:1, right? And 40,833. We already done so many questions like this in the previous class. So I hope you're thorough in it. And in which ratio they'll be withdrawing it in the new ratio, right? Because the new partner joined. So the old ratio, the goodwill was earned in this ratio, but it will be withdrawn in the new ratio. That is 3:2:1:1. So when 2,45,000 is distributed in 3:2:1:1, will be 1,05,000. Then 70,000. Then 35,000. Then another 35,000. See, we have done so many questions like this in the previous class. I already told you to revise each class after it's over because then it'll be a cakewalk. Or else it's always better to avoid a little bit of confusion. And this method is not given in the book, but this will what will help you score 100 marks and will make you have full conceptual clarity. And it'll make sure you save a lot of time because my aim is not only to make you conceptually very thorough and to teach you how to use in real life purpose, but also I want you to score 100 marks in your exam. So for that, time is a very important factor. So basically, he earned this much, but he gets only this much. So you have to give him 17,500 rupees. And this guy earned this much, he gets only this much. So you have to give him 11,667 rupees. And same, you have to give him 5,833 rupees more. And you have to take 35,000 rupees from him. Why? Because D did not earn anything, but he's getting this much because of the new ratio. Now, this is exactly what we did. What do we do? In the question, D's share of goodwill is already given. Correct? If it was not given, we would just take 1/7, that is his new share in the total goodwill of the firm, and we'll find D's share of goodwill. That is easy. But simply to find A, B, and C's adjustment amount, we need to do this tabular entry. This is the most easiest method. And this is what you'll do in the exam also. But however, in some questions like this, the where we already told you the trick to find the new ratio and the sacrificing ratio, in such case, all you need to do is after you found the sacrificing ratio directly, you distribute his share, which you already found, in the sacrificing ratio. You'll get the same answer. See, you get the same thing. So basically, first preference, if such kind of things is possible, do it. If not, even if you have a slight bit of confusion, do the tabular entry and find it out. I'm giving you both options, and whichever is convenient and based on the time available, do it. Always remember the share will be distributed only in the sacrificing ratio of the partners. Yeah. So also the about sacrificing ratio, the simple method to understand it, the core concept I explained in the last to last lecture. So everything that we have learned till now has been explained in depth. There's no reason for any confusion in your mind, and everything has been practiced. Every type of question that can be asked in relation to this also was done. I'm just giving you the type of sum that will come in the exam, the full sums. That's why we are taking a lot of time for this. Now, the second case is done. Oh, it's only partly done. We have another part of the question, right? Here we say 60% share in goodwill were withdrawn by partners. What does the 60% share in goodwill was withdrawn by partner mean? See, basically, A, B, and C get this much goodwill. That is the adjustment. Now, all we are doing is we're withdrawing 60% of the share given to them. Correct? So, what do you mean by 60% of the share given to them? Since 60% of this amount. So, now, before I proceed, I will just write sacrificing ratio here for revision purpose. Is to say that this share was distributed in sacrificing ratio. Now, the next part of the question was withdrawn. What is withdrawing entry? It's simple. A, capital account, debtor. B's, capital account, debited. C's, capital account, debited to bank. So basically, ABC partners are withdrawing 60% of the share was added to, the total share of goodwill was added to the partners by D, but to their capital account. So now they're just withdrawing 60% of the share. What is withdrawing entry from their capital account? We take some money and we take it in the form of bank. So capital account debited to bank. This is all we have done in class 11 itself. Any doubt in this? Message me and you'll get the journal entry video for free of 11th standard. Now, what do you do? 60% of 17,500 into 60%. Then here we have how much? 11,667 into 60%. And here we have 5,833 into 60%. Correct? So what is this? This 10,500, 7,000 and 3,500. That's it. The case 2 is over. These are all simple cases. The main part was this first one. Now let's go to the next case. He could not bring his share of goodwill in cash. Now, what does this mean? See, as per the Partnership Act and as per all the questions that we have done till now, the main thing that the partner should do is, along with, whenever it's admitted, along with his share of capital, he needs to bring a certain amount as a share of goodwill. How is the share calculated? The total goodwill of the firm as on the date of partner's admission into his new share and profit. Because without doing anything, he's getting that much share in goodwill, right? Only if he brings in that much amount, we pass the adjustment entry, as we have discussed in the last class. Now they're telling he could not bring in his goodwill in cash. See, in cash does not mean he can bring it in bank. Bank cash, same in this case. He could not bring his share of goodwill. That's it. In that case, what do we do? Actually, it's wrong. He should write, because he's going to get the benefit of goodwill. Only if he brings in that share, we'll be able to calculate properly and we'll be able to make the adjustment entry. So what do we do in that case? Simple. Always, whenever they say you can't bring it in cash, then you do just one thing. First, you tell him to bring that amount first. That is, bring his capital amount. Here, they're just telling that he can't bring in his share of goodwill. They're not talking about capital. So, whatever he can bring, let him bring first. So, what can he bring? He can bring a share of capital. So, what is the entry for capital? Simple. Bank account debited to D's capital. So 5 lakhs. So he's bought in 5 lakh. So whatever he can bring is bought in. It's done. So what do we do next? From what he has as his capital, we take his share of goodwill and we pass entries. That's what we do. Because he should have bought extra as goodwill, but he didn't bring, he couldn't bring. So that doesn't mean we don't pass the adjustment entry of goodwill. It's necessary part. Then only we can make sure that there's equitable distribution of profit between the parties in the future. For that, the profits earned till now, there is a goodwill earned till now, should be distributed properly. The adjustment entry should be made. This was already explained in the last class. But if such is not possible, he couldn't bring extra cash from his amount of capital that he already bought in, we pass the adjustment entry. Simple. What does that mean? We already know 35,000 is a share of goodwill. We already done. So from his capital, we reduce 35,000. After we do it, same adjustment entry. We do A's capital account to B's capital account and to C's capital account. We already calculated their share and adjustment. So it's basically the same thing. 17,500, 11,667, 5,833. Now, one doubt that you may have is why we are not writing premium of goodwill here. Simple. If he brings in cash fresh, he write premium of goodwill. But he didn't bring in cash for his share of goodwill. He just bought in capital. So this entry is to bring in capital. And from his capital, we are taking his share. That's what we're doing because we need to pass the entry. That's why before I just said there's another way to do it is a premium of capital. We can write D's capital account also. But for now, whenever it brings in cash, you write premium of for capital. That's more logical from the point of view of your board exam, irrespective of whether you're ICSE, CBSE, whichever. But the core accounting concept as per accounting standard is the same. Now this part is over. The next part is case 4. So in case 4, see, these are all the cases that the examiner can ask you. Once these cases are done, there's nothing more that the examiner can trouble you in relation to such entries. Because this is where people actually lose marks. Because other entries you can do easily. And all the ledger preparation will all be easy. It's a simple concept. But this is where the examiner can trouble you. But now he can't trouble you because you have learned the proper way. Now, he could only bring 60% of his share of goodwill in cash. So what did I tell you? Whenever he can't bring in some amount of goodwill, you just pass entries for how much he can bring. First, let him bring whatever he can. So, first one, case 4. What can he bring? He can bring in his capital, same as before. Bank account debited to D's capital. And they say he can bring in only 60% of his share in goodwill. So, he passes it as one entry. Premium for goodwill. You can do it separately also. But I'm just passing it as one entry. So what is this? He actually bring in 35,000. But since he can bring only 60%, it's 50,000. So it's 5 lakh. And then we do 60% of 35,000. That's 21,000. Then 5 lakh 21,000. Now, the next part. Whenever it comes to passing adjustment entry for goodwill, we don't compromise on that. So, as far as amount transferred to A, B, and C, that is the same amount that we get as per the tabular format entry that we have calculated. So it's the same. The A will anyway get 17,500. B will get 11,667 and C will get 5,833. This needs to be done, but we have to pass entries in such a way based on how much is bought in. So first, what do we do? Let's see. He's bought in some amount as premium of goodwill. First, let's use that. How much has he bought in? He's bought in 21,000. How much more he needs to bring? He needs to bring 14,000 for the account to tally both sides. So this 14,000, since there's nothing else he can do, nothing else he can bring, we take from his capital account. See, it's basically the same thing. Last time he couldn't bring even a single rupee as premium of goodwill. So we took the entire amount from D's capital. but now we can bring in little. So the rest we take from D's capital. In either way, we can only take from D's capital if there's any shortage of bringing in share of profit, share of goodwill. But how much we need to take will be based on the question. And since 21,000 is already bought in as a share of goodwill, the remaining amount only will take from D's capital account. That's it, guys. This part is done. This is the part where which can be a little tricky, but since we went in a sequence in a conceptual way, it becomes easy now. This is basically because of the previous lectures that you paid attention to, because we talked about every single thing in proper focus and clarity. Because of that, this is easy for you now. One more thing. This part is done, but you need to pay attention to another thing. We are actually finishing the chapter of partnership a little fast, because fast means as far as time is concerned, but as far as the amount of questions we did, clarity you get, and your ability to solve any question in partnership, irrespective of who creates it, whether it's a CA or even the greatest examiner or the person who makes the exam question paper, right? Whatever question he asks, you can easily answer, because this is completely based on everything that's part of the accounting standard itself. So you don't have to worry. So I want you to revise quickly also. As and when we complete each and every chapter, I want you to keep revising it. That's when you can do properly. Because once you revise it now, you're doing it here in the question, like in the class along with me, then you revise it after you go home. After that, one day before the exam, I'll already told you how to revise the best way. Solve 3 questions, one easy, one medium, one hard. And after that, go through every easy questions, or every question that is written, just have a read through. Your mind will immediately be able to form connections and you will revise. You don't have to solve every question. Just 3 questions, easy, medium, and hard. And the rest you just look through, because you already know how to solve it. You just need to refresh that part of your brain, which will already be done once you solve one hard question. And the other things is just little adjustments you need to do. This is the way to revise. And which is easy, medium, and hard, that you decide. Or maybe after the lecture is over, I'll give you a revision schedule also if you want. Now, case 4 is over. Now, case 5. He could not bring his share and cash, and partners decided to raise goodwill in the book of firm. Now, wait. The last 2 cases are very particular. What I need you to do is pay attention to what I'm telling now. Whenever they say he could not bring his share and cash, and they just left it like that, and it becomes the previous case. You take from D's capital account, but the entry needs to be passed. But here they say, and partners decided to raise goodwill in his book. This is where a little separate thing should be done. What is it? You'll know now. I'm going to do the solution. But before that, another thing I want to tell you, one question you may have is, if he could not bring his capital also, in that case, you can't, he didn't bring his share of goodwill and capital. And how would he pass such entries, goodwill entry in that case? Because goodwill entry is a must. As per tabular form, how much ever each partner should get should be done whenever there's an admission. There's no other thing you can do. This is an obligation you need to complete as per the law and accounting standard. In that case, it will come in your CA intermediate. Right now, that type of questions cannot even be asked. But for your level, just think that if you can't bring a share of capital, then you won't be admitted. You should bring at least a share of capital, and even if less, in such case, it should be at least equal to the adjustment entry of goodwill. But don't worry about it. Don't get confused. That questions will not come in your exam. It won't come till your CA foundation or CMA foundation or the CS, whichever level, the equivalent level. So now let's go on to the case 5. Case 5, they're telling you could not bring in share. That's normal. So we need to pass, you need to raise goodwill in the books. So what does raise actually mean? Raise actually means that I already told you in your books of account, this goodwill can only be shown if it's a purchase goodwill. This we learn in valuation of goodwill chapter. If whenever it's self-generated, as per law, it's not allowed to be shown. So, But however, in this case, actually the question itself is wrong. They can't ask such questions. Because as per law, it's not permitted. But since the examiner is asking you such questions, you just write the answer for that. Don't write it's not possible as per law. You're fine. Conceptual clarity is important. To have an edge over others is important. But getting marks also is important. So you don't have to piss the examiner off. So what you do is, if we ask such questions, then you write in such manner. Basically, what do? We know that bank account debited to D's capital is the entry for raising capital, bringing capital. After that, since there's no entry for goodwill, and they're telling we can't take from D also. They're telling we need to raise goodwill in the books. What does raise means? Raise means you have to create goodwill in his books. Create means one asset by the name of goodwill should be created in the books to the extent of 2,45,000. Why? If raise means one new asset called goodwill should be formed in the book. Sometimes they may ask us questions. Exactly the same question only will be asked. Don't worry. This little a little different type of questions that the exam can ask. So I'm covering everything that the examiner can even think of. That's why I'm bringing this question now. So why 2,45,000? This is the goodwill amount that's mentioned in the question, and which is the goodwill amount, self-generated goodwill that was calculated as on the date of D's admission. So this amount should be raised. So how will it be raised? Simple. Since it's calculated on the date of D's admission and is self-generated. So D had nothing to do with it. Only A, B, and C must have earned it. This clear thing was discussed in the previous two lectures. Since A, B, and C have earned it, they would have earned it in their old ratio, as discussed before. So you have to create it in the old ratio, sir. In which ratio it was earned? Same 3:2:1. So 1,22,500, 81,667, 40,833. So we are creating this amount as goodwill in the asset, and we are crediting this, since journal entry both sides should be equal. We're crediting it in such a way, we're increasing the capital in the ratio in which A, B, and C must have earned it. So this was created, this much goodwill, and it was created in this ratio. That's what this entry actually means. So such type of questions which can come for 1 mark should be solved like this. Now, continuation of this question is, in the first question, they say we need to raise goodwill in the book of form. So we raised it. The second question, they say you cannot bring in, pardon, they said to raise and then write off goodwill from the books of account. So in this case, after we raise, we need to pass another entry. What is the other entry? Simple. Let's go to case 6. So case 6, the raising entry is the same. Goodwill, account debited, 2,45,000. A, B, C, in the ratio in which they earned it. So 1,20,500, 81,667, and 40,833. Now we need to write it off. Write it off means, in the previous case, we just needed to raise it, and this will be part of your books. Now, in this case, they're telling we need to raise it, but then immediately we have to even kill it. That we need to reduce it from his book, the entire amount. How do we reduce it from his book? See, this is what we need to do, what the examiner says, because we need to earn marks. Conceptually, this is wrong. But since the examiner asks such questions, and he can and he has before, as for a previous year question paper, and it's part of T.S. Grewal also is written, I have condensed every book answers. So we just need to write it off. How do you write it off? 2,40,000 was there. We need to write off the entire amount. So the entire 2,45,000 will be written off. So since it was debit first, asset was raised. Now to decrease asset, we need to credit it. Now, what will the debit side be? Both side needs to be equal. So debited, C capital account debited. So this is where you need to pay little attention. D is capital account debited. Now, let's make it clear here. On the date of D's admission, 2,45,000 goodwill was there in the book. It was not even there in the book. the goodwill of the firm was calculated. Since it's self-generated, it's not part of the book. The 2,45,000 was calculated. So first they're telling you need to raise it. So we need to raise the 2,45,000. How will you raise? In the ratio in which it was earned. So only A, B, and C have earned it. So that's it. Here they're telling we need to write it off immediately. In order to write it off, what was debit, we need to credit. And since equivalent entry should be passed, we need to debit A, B, C, and D. And in which ratio will they take it? Like in which ratio should we write it off? Simple. We need to write it off in their new ratio. What is the new ratio? 3:2:1:1. I'll tell you, wait. 1,05,000, 70,000, 35,000, 35,000. So basically, we created it in the old ratio, in the ratio it was earned, and we wrote it off in the ratio in which it will be taken. Earned and taken, credit and debit, we discussed in the last class. So I'm not going to repeat it here. If any doubt, go and revise the last class part. I don't even think you need to revise it. Just go through the notes you written for the last class. That's enough. And go through the sums we did last class. So it was earned previously in ABC, but now they're telling you to write it off after it was created. But now when you write it off, D is also a partner. So since D has become a partner, then you have to write it off. You have to give a share to D also. So A, B, C, and D will write it off in their new ratio. That is 3:2:1:1. Basically, when now goodwill needs to be created in the books, and it's mentioned in the question, you create it in the ratio in which it was earned. And they tell you to write it off. You write it off in the new ratio, in the ratio in which it will be withdrawn, like discussed in the previous class. 3:2:1:1. That's it. This question is done. There's nothing else that the examiner can ask you in relation to goodwill and the entries in admission, retirement, and death, and change in profit sharing ratio. Now, one more thing. Whenever they say that the goodwill of a sorry guys, there was a little technical difficulty with the last video. I need to tell you another thing related to case number 6. So we already learned that this goodwill, when it's created, will be created by the old partners in the old ratio, that is in the ratio in which it was earned, and will be written off among the new partners in the new profit sharing ratio. We learned till now. However, when we look at it logically, this goodwill account which is debited and which is credited will get cancelled. And when we look at the net entries, that is A is credit and A is debit, B is credit and B is debit, C is credit and C is debit, and D is in the debit side. So basically the net entry is D is capital account debited 35,000. That is this. Then 2 A is capital account where this 1,23,000 minus 1,05,000 because credit debit. So it will be 17,500. Same thing for B. It will be 11,667. And as far as C is concerned, it's 5,833. So when we look at it from a logical standpoint, we see that this is the entry that we have passed before. See, it is the same entry that we have been passing. So whenever they say goodwill is created, then you only do the creation entry. But whenever they say created and written off, which will clearly specify, in that case, you pass these two entries. And you understand it from a logical standpoint because you see that the net effect is the same. But when they say it's created and written off, you need to pass these two separate entries because that's what the examiner expects you to write. This first question is done, guys. This is a very important question, and this covers everything that the examiner can ask you in relation to goodwill treatment when it comes to admission. This is actually the same thing for retirement and death and change in profit sharing ratio. If this is a small adjustment or a change in format, which you'll do. Anyway, we're going to do all the sums related to the entire partnership chapter. But I started with admission is because once you understand this, the others will be a cakewalk. Now let's move on to the next question. Second question. So in this, here they say A and B are partners sharing profit and loss in the ratio 3:2. They agree to admit Z as a partner for 1/5 share. Okay. Then they say Z acquires a share from A and B in the ratio 2:3. Goodwill of the firm is 1 lakh. Z brings in a share of goodwill. Okay. And 2 lakh through check. Okay. Necessary journal entries. If capital is fixed, we assume capital will be fluctuating till now. So if capital is fixed, instead of A's capital account or B's capital account, we write A's current account and B's current account. That's the only difference. And we already done this hundreds of times. And when goodwill appears in the books at 10,000 and partners decide not to show goodwill in the book of accounts, and when goodwill appears at 20,000 and partners decided to show goodwill in the book of firm at its book value. See, these questions that I'm giving you right now is going to cover all the exceptions that can come in questions. Because standard, you will do it easily with your eyes closed. But exceptions is where the examiner can test you. And all the exceptions that I'm telling you now, you just need to read it through once. Because I'm going to explain it in such a way and you're going to practice it as and when we go. Because of that, you're going to get 100 marks in your exam. That's my aim. Conceptual clarity, proper time management, and the exact thing that the examiner expects, you're going to write. And my aim is all these three. So when these three are done and we focus on these three processes, the result is a byproduct. So now, when we read the question and you don't understand it, all I want you to do is try to break the question down. I've been telling you this from the starting chapter. Actually, from the 11th standard of journal entries, I've been telling you this. But what I mean by break the question is, see, it won't happen that you won't know any particular term or any particular entry in your exam, or you will be stuck in a question. That's not going to happen. We're going to cover everything. But in case, if there's 0.0001% chance that something like that happens, then I want you to break the question and answer what you know. Like solve the parts you know. Once you solve the parts you know, 99% of the time, the unsolved part also will get solved in the process. If it doesn't, you lose what? 1 or half a mark for that part only. So you don't have to be stuck if you don't know a particular thing. So till now, actually, if you look at it, we have done everything that's given in this question separately. Now we are just putting it together and preparing you for how the examiner will ask you. So here they say old profit. So I told you that whenever such questions are given, you need to write form a working note part. So here they say 3:2 is the old ratio. Then Z was a partner. He was admitted for 1/5 share. And date is not mentioned, so okay. And they say date acquires to. So they already mentioned. If you read the question clearly, here they're telling you that Z acquires a share from A and B in the ratio of 2:3. What does this mean? See, we have done profit sharing ratio sums a lot of times. But what does this mean when I say Z acquires a share from A and B in the ratio 2:3? So that is, usually if it was not mentioned in the question, Z will acquire this 1/5 share from A and B in 3:2 ratio. But since they're doing 2:3, then assume that the sacrificing ratio is also 2:3 between A and B, right? That's what it means. And as far as new ratio is concerned, you need to calculate it using the method we have discussed before. But however, another reason why I bought such questions first is sometimes this will count for about a 4-mark question. So in a 4-mark question, as per proper estimate, you need to complete this in 6 minutes. That's the best way to finish it. So in such questions, if you start on by calculating the sacrificing ratio or the new profit sharing ratio in the normal method that we discussed, even though that's faster than any other method given in the book, even then you're going to spend 2 minutes for that. But however, in such type of questions, actually most of the cases it's not necessary to calculate new ratio. And sacrificing ratio will usually be given in the question itself. So whatever is asked in the question, you need to think in such way and try your best to save time. What do I mean by this? I'm going to solve this question in a certain particular way. See, if you have a doubt in it, you solve it using the normal way. Anyway, you're going to spend 2 minutes extra, but you're not going to make any mistake. But I'm giving you a tip to save the 2 minutes because my job is to make sure you save every second that is possible. Now, here we don't know the new ratio, but we know Z's new share is 1 by 5th. And we know the sacrificing ratio is 2 to 3. Why? Because they say Z acquires a share from A and B in the ratio 2 to 3. This can be found out normally by the method also, but here it's already given in the question. Now, what I'll do is, first I'll complete the working notes. Here I say goodwill of the firm is valued at 1 lakh. So as on this date, on the date Z was admitted, the goodwill, that is self-generated goodwill of the firm, is 1 lakh. We have discussed this many times. And then they say Z brings a share of goodwill and 2 lakh as his capital through check. Now, capital bought in by Z is 2 lakh and his premium for goodwill is how much? They're telling me he brings in premium by check. But how much is the premium? It's simple, right? We have done this a lot of times. 1 by 5th is his share. So goodwill is 1 lakh. So his premium will be 1 by 5th of 1 lakh. That's 20,000. Please listen. I'm going to solve this in a quicker method. And I'm going to take only things that are necessary for the question. You go through what I'm trying to tell you and you see if you can solve it using this method for such particular questions. It is only in relation to time saving perspective. As far as concept is given, it's nothing different. I'm just summarizing steps quickly and I'm going to skip steps. But making sure that whichever steps is important for the question, I'm going to do only that. Now, in case you're not thorough with it or not sure about it, which there's no chance, in such cases, you do the normal method. A given premium of goodwill, you calculate using the tabular form, pass those entries and do it. But this is how I'm going to do to save time. So we have done all the working notes required. Now here they say when goodwill appears in the book, 10,000 and partner decided not to show goodwill in the book of him. Now, what does this mean? You can see that there are two goodwills. One goodwill is 1 lakh and another goodwill is 10,000. Now, I've already told you before, whenever they say goodwill of the firm is valued at 1 lakh, when any admission is done or retirement or death of a partner, change in professional ratio, this is in relation to self-generated goodwill. Correct? So this self-generated goodwill is never shown in the books of accounts. However, here they say goodwill appears, that is on the date Z is admitted, goodwill appears in the book to the extent of 10,000 rupees. Now, what does this mean? If any goodwill comes in the books, then it is assumed to be purchase goodwill because only purchase goodwill comes in the book. We have discussed it before. And here they say partners decided not to show goodwill in the books. Now, whenever any goodwill is shown in the books, when it comes to partnership chapter, irrespective of whether the partners say that you need to write it off, even then, even if the question is silent, you need to write this goodwill off. That is a standard format. So the first entry, as far as case 1 is concerned, is writing off the goodwill. How much is the goodwill? 10,000. So goodwill is an asset, it's in the debit side. Now we need to credit it because we are going to write it off. Goodwill account, 10,000. Then A's current account because it's fixed capital account, right? A's current account debited and B's current account debited. And it will be written off in the old ratio. What is the old ratio? 3:2. So 6,000, 4,000. Wait. You can ask me that why are we writing off in the old ratio? See, the goodwill is appearing in the books. So there must be some purchase goodwill before Z is admitted. So when that Z is before that Z is admitted, A and B used to buy things at the expenses and the income is shared in 3:2. So we are just writing off the goodwill that has been bought by the partners in the ratio of 3:2 in the ratio of 3:2. That's it. Now, this first part is over. Second part of the question in case 1 itself shows that we need to pass entries for goodwill. Though that's not mentioned in the question, but that's what the question expects you to do. So before we pass entries for goodwill, we need to write the capital entry. That is bank account debited to Z's capital account to premium for goodwill account. So how much is Z's capital account? It's 2 lakhs. And how much is the goodwill? It's 20,000. So 20,000. So Z brings in 2,20,000 worth of cash. What did they say? Check. Yeah, worth of bank into the business. Now the next part is to make the adjustment entry of premium goodwill. There are 2 ways. What are the 2 ways? Tabular form. Old partner, old ratio, new partner, new ratio, and find it out. Or distributed in the sacrificing ratio. Now, most of the time, instead of calculating sacrificing ratio, I'll tell you to do the tabular method. But here, since we did not put any effort to calculate sacrificing ratio also, it's already given in the question. We are just going to use it. So, premium for goodwill account debited 20,000 to A's capital account to B's capital account. What is the ratio? Old ratio 3:2. What is the sacrificing ratio? 2:3. So it's basically 4,000. 8,000 and 12,000. Now, pay attention to what I'm telling you now. Here. This question, generally, to pass this goodwill adjustment entry, as per the normal method, we would have done 2 additional calculations. That is, first we would have found the new ratio using a normal method of finding sacrifice ratio and new ratio. And then after that, we would have passed tabular entry and we would have found out how much A and B should get and how much Z should contribute. But here, without doing any of those things, I finished the question. And since it will be only for a 4-mark question, if it is for 8-mark, then do those 2. But if it's only for a 4-mark and there are 2 cases, that means each is for 2 marks. And we can't spend a lot of time because we have to save time for additional questions also. So I just use the sacrificing ratio that's given in the question. And without calculating new ratio, I already know 1/5 share is the new share of Z. And if new share of Z is this, that means out of the self-generated goodwill, he needs to bring in 1/5. That is 20,000 as his premium for goodwill. We have discussed how this works when I discussed tabular entry in detail. So this part is over. So you finish the question from the exact information in the books, in the question itself, without doing a lot of working notes. Because we did the main working notes here. This is what I was trying to explain. When you do it quickly, you can do it in 4 minutes. Now, let's go on to case 2. Now, case 2 is where the question is a little different. Here they say everything is the same. Everything is the same. Only thing that's different is the goodwill that was appearing in the book for 10,000 before, now it appears for 20,000. And also that 20,000, partners decided to show the goodwill in the book at its book value. Now see, I clearly told you that whenever write a note somewhere, goodwill in book will always be written off in entire partnership. Okay. I want you to write this note clearly. In the entire partnership, goodwill in the book will always be written off, even if the question is silent. However, here the question specifically wants to show goodwill in the book. Here the tell is not necessary. And even if it was silent, we would have written it off. But here they're telling their partners want to show it in the books. So if the question is like that, then you show it in the books. Nothing else you can do. So basically, what it says is, we already know that the self-generated goodwill, that the value of the goodwill on the date of admission is 1 lakh. However, in the books of the account, in the books of the firm, there was a 20,000 goodwill, and the partners want to keep it. So in that case, what do you do? Simple. If 20,000 goodwill they want to keep and it's purchased goodwill, then I want you to do this, because this is a very specific type of question that can be asked. And whenever such question is asked, you do the same thing. So what you do is, I'll tell you why. Wait. You subtract 20,000 from the self-generated goodwill, and you assume that only 80,000 is actually the value of self-generated goodwill as on the date of admission of a partner. And you calculate Z share of premium of goodwill from this 80,000. So what does it mean? Basically, for now, it's actually a very advanced concept. But just for your level of understanding, what I want you to know is, since they want 20,000 to be kept in the books, that means this 1 lakh includes this 20,000. Only in this case, they want to keep it in the books. So you assume that the 1 lakh includes this 20,000. If 1 lakh includes this 20,000, that means this 20,000 is purchased. So out of 1 lakh, 20,000 is purchased. That means 80,000 is self-generated. And whenever you want to calculate the self-generated value of the firm, of the goodwill, in that case, all partners, new partner share and old partner share will only be calculated in the self-generated part, because the self-generated value of the goodwill is actually the goodwill that has been earned by the old partners. That's what self-generated goodwill actually means. So this 80,000 is earned. So we need to calculate the share that Z should contribute only from things that A and B have earned. This 20,000 was purchased, so that was not earned. And as far as goodwill is concerned, Z share can be only calculated on the purchased, on the earned part of goodwill. You understand only this much for now. Anything else is not necessary. I'll teach you when it comes to CA intermediate. But for now, what I want to do is, premium of goodwill will be 80,000 into 1 by 5. Same thing. Z share. Nothing else changes in the question. So 16,000. Also, we were writing off goodwill, but they said they want it to be given written in the books. So first entry, there's no entry, since goodwill is already there in the books and we don't have to touch it. The second part is the entry of adjustment. What is the entry of adjustment? First, we need to make the entry for capital bringing in. So to Z's capital account. And then we have premium for goodwill account. So Z 2 lakhs and 16,000. So 2 lakhs 16,000. Now what do we need to do? We need to pass the adjustment entry for goodwill. Simple. Premium for goodwill account debited is 16,000 to A's capital account and to B's capital account in the sacrificing ratio. That is 2:3. So if it's 2:3, that means 6,400 for this and 9,600 for B. That's it, guys. The second case also is over. So this is the basic question that we have discussed. When such question comes, you need to follow the same method. If you have any doubt, I want you to go through what I'm telling you again and revise it. Because these are specific questions that the examiner can ask you for troubling. This is because I compiled every single T.S. Greva or any other book that we refer, or the NCERT books, and also books of different boards, along with Delhi University's BCom books, along with CA Foundation's books. So out of everything and out of the entire accounting standard when it comes to partnership and the Partnership Act also, 1932, these are the entire number of questions that can be asked. There's nothing more that can be asked apart from this. So now we'll go on to the next question. That is the third question. The third question, they say A, B, and C are partners, sharing profit in, okay, 2:3:4. First April, D was admitted, new partner, okay. And the goodwill of the firm was 1 lakh. They share new profit That is 1 is to 1 is to, okay, equally. Then here they say D bought in stock of 80,000, debtor 20,000, land 1 lakh, and plant and machinery 25,000. Pass entries. Now, already told you, whichever you don't know, try to break it down and first solve what you know. And the first basic step, what do we learn? We learn to form working notes. So, what is the first working note? A is to B is to C. Before it was 2 is to 3 is to 4. And now on 1st April 2022, D was admitted. And when D was admitted, the self-generated value of goodwill is 1 lakh. And the new profit sharing ratio is already given in the question, so we don't need to calculate the new profit sharing ratio. So it's equally, so 1 is to 1 is to 1 is to 1. Okay. So D was admitted 1/4 share. And D brought in stock this much, debtor this much, land this much, plant machinery this much. What does it actually mean? Why will D bring in such things? Whenever D brings in something into the business, it'll either be capital or it'll be premium for goodwill. Those are the only two things D will bring. That is the new partner will bring. So instead of bringing bank or the cash as capital, D is bringing stock, debtors, land, and plant and machinery from his old business or some from his house into the business as capital. That also can be done. Anyway, it's capital. Either way, we need capital only. It can be in any form, as far as the question goes. So now, here, when you have a look, they say stock 80,000. They say debtor is 20,000. And they say plant and machinery is 25,000. And finally, they say land is 1 lakh. Now, whenever they say this, they're not clearly mentioning how much of it is a premium of goodwill and how much of it is the capital, because we need the distribution to pass the first journal entry. So, either way, that something will be given in the question to find that. So, when we add everything, it's 2,25,000. Now, this part is done. Now, how do we find which is what? Simple. The self-generated value of goodwill as on the date of admission is 1 lakh. 1/4 is the share of D. So, is premium of goodwill, how much will it be? 1 lakh into 1/4. Everything will be given in the question. Don't worry. 25,000. And what we are doing is exactly what will come in the exam. So, 25,000. So, we know 25,000 is the premium of goodwill. So, out of everything bought in, 25,000 is the premium of goodwill, and 2 lakh is the capital of the new partner, D. Now it's done. All we have to do is pass entries. Correct? But here, if you look at it, we can directly pass entries. Because to pass the adjustment entry, we need to either do the tabular method or we need to know the sacrificing ratio. Here we know the old ratio, we know the new ratio. We don't know the sacrificing ratio, as the case I told you where you can easily find out the new ratio and sacrificing ratio is not there. Here it's completely equal. So the ratios are completely different. So now we need to do the proper method. So what is the proper method? You've done it so many times. Simple partners. A, B, C, and D. We have old ratio. Then here we have new ratio. Then here we have sacrificing ratio. What is the old ratio? 2 is to 3 is to 4. So it's 2/9, 3/9, 4/9. Correct. New ratio 1 is to 1 is to 1 is to 1. So 1 is to 4, 1 is to 4, and 1 is to 4. What is the sacrificing ratio? What does sacrificing mean? What we had before is greater than now. So old minus new. So I've already explained this sacrificing and gaining ratio in such a conceptual manner. We don't even need to remember the formulas. Just understanding logic is enough. So this, then we have minus 1/4. Yes. Then we have 4/9 minus 1/4. Then here we have minus 1/4. So we clearly know, since it's in minus and you didn't have anything before, now we have 1/4. So it's clearly a gain. Now we need to do these sums, these three sums. So basically, we get minus 1/36. Here we get 3/36. 36, and here we get 7 by 36. Now, understand this clearly. Although this was explained numerous times, just for clarity purpose, I'm going to give you a walkthrough. Here, these two are in plus. So while calculating sacrificing ratio, we know that if old is greater than new, the sacrificing ratio will mean plus. Because what does sacrifice mean? What we had before was more than what we have now. So when we do old minus new, we should have something in plus only. But while calculating the sacrificing ratio, that is old minus new, if this comes in minus, even this came in minus, right? So we had more now than before. So there's no sacrifice. So obviously, when we use the sacrificing ratio formula, there will be a gain here. Same. We are seeing that even A is gaining, even though D was the new partner. He'll gain, obviously. But as far the new ratio is concerned, even A will gain after there's a new ratio. This was clearly discussed in the previous classes when we discussed proper channel ratio. If any doubt, go back, and I think there should not be any doubt because it's a very, very simple concept. If any doubt, I would suggest you to pause it now and go back to the, I think 2, 3 videos back, and you have a look at it and come back. Now, here we know that this A is gaining and D is gaining. So now, if A and D are gaining, then what is the sacrificing ratio now? Sacrificing ratio will only be among the partners who sacrifice. It's simply 3:7. Only B and C sacrifice, so 3:7 is the sacrificing ratio. Now, also, before we move on to the next step, I want you to pass the first entry. You already know what the first entry is. Bank account debited to capital account. So which capital? D capital account. And to premium for goodwill. So basically, what do we do? 2 lakh, 2,25,000, 2 lakh here, and 25,000 here. Next part of the entry, what is it? Premium for goodwill, 25,000 will be debited. Now, pay close attention here. In order to find the adjustment entry, there are two ways. One is tabular method. Second one is sacrificing ratio. We already have the sacrificing ratio here, but the sacrifice is only between two partners. But if the sacrifice is only between two partners, we need to do something different. What is it? We need to find whether it is a gain or sacrifice between that is the fourth partner. And we need to find how much is gaining. Only then can we use the sacrificing ratio. Why? You'll know after this question. I bought this question in at such a time because after this you'll be completely thorough with any type of question that they can ask. Maximum difficulty if the examiner wants to give you, he'll ask such questions. More than this, nothing else. Only the terms or the values may be different, but the question will be the same. Now, how do you find this? See, because we need to find the adjustment entry in relation to goodwill for all four partners. The first partner we know because we know is premium goodwill share. There's a D joining partner. Then here we also know the sacrificing ratio of these two partners. But we don't know the amount for this. Only if we know the amount for this, we can complete the journal entry of adjustment. Correct? So how do you find the amount for this? Simple. Here we know that the total goodwill is 1 lakh. If this is not mentioned in the question and they say 25,000 the premium of goodwill, you know how to find the total goodwill. Because 1/4 share of D, 25,000 if it's premium of goodwill into 4. That is by divided by 1 into 4, that is share, you get 1 lakh. You've done it a lot of times. So this is the total goodwill. So in this total goodwill, here it says that A gains 1/36. So if he gains 1/36, so we write A's share of goodwill gained is 1 lakh into 1/36. So what is 1 lakh into 1/36? Basically, it's 2,778. Okay. Now, we have done sums like this a lot of times. Any doubt, go back to the previous lecture and see. Because after this, there's nothing else you need to learn in regards to this adjustment is concerned. And the major portion that the examiner can trouble you with will be covered, irrespective of which chapter it is when it comes to partnership. So after this, we'll jump on to full-fledged questions like that involving balance sheet and all those things. And for that, a thorough base of this is necessary because majority of the hard questions will be here. The other questions in those full-fledged questions will be easy. This is the hard part. And now this is thorough. So I want you to be completely thorough and revise it properly. Now, if A gains 2,778 as his share of goodwill, then what he is being gained before? What does it mean? He has gained without doing anything. First he had a small amount of share. Now, because of change in ratio, without doing anything, he has gained 2,778. So what does he need to do? He needs to give that gain to the other partners. In which ratio? Sacrificing ratio. How does it work? Wait. Now, since A has also gained, even A should give his share. So A's capital also will be debited because his capital will be reduced because he's giving a share. So 2778. And who will get it? Simple. The sacrificing partners. Who are the sacrificing partners? B is capital account and C is capital account. What ratio will they get? Sacrificing ratio. What is sacrificing ratio? 3 is to 7. Now what will they get? The entire thing will be distributed in that ratio. So if the entire amount is distributed in that ratio, will be 8,333 to 19,445.